On January 5, 2026, Under Armour's stock shocked Wall Street by suddenly surging 7.2% in late trading. The spike was so abrupt that it caught even seasoned investors off guard, with trading volumes spiking and financial news outlets scrambling to explain the cause. For a company that had been struggling for months, this was a dramatic and unexpected turn of events. It was a rare bright spot after a long stretch of decline, where Under Armour's shares had been battered by disappointing earnings, fierce competition, and waning investor confidence. Many had written the brand off as another fallen giant in the sportswear industry, but this sudden rally wasn't sparked by a flashy new sneaker or a viral ad campaign. Instead, it was triggered by a major financial maneuver that had nothing to do with product launches or celebrity endorsements. News broke that a powerful outside player had made a bold move, instantly changing the conversation around Under Armour's future. Fairfax Financial Holdings, a respected Canadian investment firm known for its strategic bets, revealed it had acquired nearly 42 million shares, amounting to a massive 22% stake in Under Armour. This wasn't just a minor investment, it was a clear signal of confidence from a major player in global finance. The announcement sent shockwaves through financial circles. Analysts and traders, who had been bracing for more bad news, suddenly found themselves re-evaluating Under Armour's prospects. The narrative shifted almost overnight, from one of struggle and uncertainty to one of potential recovery and renewed optimism. Investors who had lost faith in the brand now saw a reason to hope. The stock's rebound offered a glimmer of possibility that Under Armour's best days might not be behind it after all. Fairfax's move wasn't a reckless gamble. It was a calculated strategic bet on Under Armour's long-term potential, a belief that the company's fundamentals and brand value could still deliver results, even after a tough period. For athletes, investors and loyal fans, this investment was more than just a financial transaction. It was a powerful signal that Under Armour's core values, performance, innovation, and resilience, might still be alive and well. The big question now is whether this marks the beginning of a true comeback. Can Under Armour leverage this renewed confidence to reclaim its place among the sportswear elite, or is this just a temporary boost? One thing is certain, with Fairfax's backing, Under Armour's story just got a compelling new chapter, one that the entire market will be watching closely. To truly understand the significance of what's happening, you first need to know about Fairfax Financial Holdings, a company that's quietly shaped the financial landscape in Canada and beyond for decades. Headquartered in Toronto, Fairfax is often referred to as the Berkshire Hathaway of Canada. This reputation comes largely from its visionary leader, Prem Watsa, a legendary value investor who's earned global respect for his disciplined long-term approach to investing. Fairfax's core strategy is simple but powerful. They seek out companies that are undervalued or overlooked by the market, invest in them, and then hold on to those investments for years, sometimes decades, waiting patiently for their true worth to be recognized. Over time, Fairfax has built a remarkably diverse portfolio. Their holdings stretch across insurance, restaurants, retail, manufacturing, and more. This diversity isn't random, it's the result of careful, strategic decisions, always guided by a patient, long-term mindset that sets them apart from more short-term focused investors. When Fairfax makes a move, especially one involving billions of dollars, the entire market pays attention. Their investments are seen as a signal that there's hidden value where others might only see risk or uncertainty. It's a sign that Fairfax's team has done their homework and sees potential others have missed. Prem Watsa's reputation for making bold, contrarian bets has earned him the nickname, the Warren Buffett of the North. Like Buffett, Wada is known for going against the crowd, trusting his own research and instincts, and sticking to his convictions even when others doubt him. For companies, having Fairfax and Watsa involved is about much more than just receiving capital. It's a powerful stamp of approval, a sign that a respected, experienced investor believes in their future. So, when Fairfax steps in to back a company like Under Armour, it sends a clear message to the market. The challenges facing Under Armour may be temporary setbacks, not permanent flaws. Fairfax's involvement suggests there's real potential for a turnaround. This isn't just another financial transaction, it's a strategic endorsement, a partnership that can help restore confidence and open new doors for Under Armour. With Fairfax on board, Under Armour gains not only much-needed capital, but also a boost in credibility and stability. qualities that can be just as valuable as money in the business world. Other investors, analysts, and industry insiders take notice. The narrative around Under Armour begins to shift as people start to wonder what Fairfax sees that others might have missed. Sometimes, all it takes is one respected backer to change the entire trajectory of a company, and Fairfax Financial, with its track record and reputation, is exactly that kind of backer. Fairfax's optimism stands in stark contrast to Under Armour's tough 2025. The company's stock plunged 40% as revenue declined and customers drifted to rivals like Nike and Adidas. Under Armour struggled to adapt as athleisure blurred the lines between sportswear and fashion. The brand's gritty identity faded, making it harder to stand out. Attempts to refresh products and reconnect with customers were slow to show results. Investors doubted the turnaround plan, and patience was running thin. 2025 was a year of hard lessons and mounting pressure. The Fairfax investment arrives at a critical crossroads. In 2025, Under Armour faced one of its most significant setbacks yet, the departure of basketball icon Stephen Curry. This wasn't just a business transaction, it was a seismic shift for the brand, shaking its foundation and sending ripples through the entire sports industry. For more than a decade, Curry wasn't just an ambassador, he was the heartbeat of Under Armour. His electrifying performances and magnetic personality helped transform the company from a challenger brand into a global powerhouse, driving not only sales, but also a sense of cultural relevance that few athletes can deliver. Curry's signature shoe line became a billion-dollar juggernaut, a symbol of Under Armour's meteoric rise in the world of sports apparel. His shoes weren't just products, they were cultural icons, worn by aspiring athletes and collectors alike, and they helped define an era for the brand. The end of this partnership left a massive void, financially, emotionally, and symbolically. It wasn't just about lost revenue, it was about losing a key part of the brand's soul, a connection that resonated with millions. Suddenly, Under Armour was faced with tough questions. Could they still attract the next generation of superstar athletes? Would other top talents see the brand as a destination, or would they look elsewhere for their big break? And perhaps most importantly, was Under Armour's cool factor starting to fade? In a world where image is everything, the loss of Curry raised doubts about the brand's ability to stay relevant and desirable. This wasn't just a marketing challenge, it was a blow to Under Armour's very identity. The brand had to confront the reality that its most powerful symbol was gone, and the path forward was uncertain. Replacing Curry's influence is nearly impossible. His legacy with the brand is unmatched, and finding someone who can fill those shoes, literally and figuratively, will be a monumental task. The end of this era forced Under Armour to go back to the drawing board. They had to rethink their entire strategy, searching for a new story to tell and a new face to lead them into the future. Now, the brand stands at a crossroads, challenged to chart a fresh course and rediscover what makes it special. The next chapter for Under Armour is unwritten, and the world is watching to see what comes next. Fairfax's investment is more than a financial boost, it's a public endorsement. Like a top chef praising a struggling restaurant, it makes people take notice. For months, Under Armour's story was all negative: falling sales, lost partnerships, and a sinking stock. Fairfax's move breaks that cycle, injecting optimism and stability. Other investors reconsider. If Fairfax believes, maybe there's hope. The stock's jump reflects renewed confidence. With Fairfax as a major shareholder, Under Armour gains breathing room and morale. The company can now focus on its turnaround, backed by a patient, supportive partner. Stability replaces fear, and the narrative shifts. Sometimes belief is the first step to recovery. A company's story shapes its fate, especially in consumer brands like Under Armour. After a year of setbacks, the Fairfax investment is a plot twist. The underdog finds a powerful ally. Suddenly, hope replaces doubt. This shift attracts talent, reassures partners, and even influences customers. Suppliers and endorsers see a brand on the rise, not in decline. Positive news and renewed energy can make Under Armour feel exciting again. The narrative trickles down, boosting confidence at every level. With Fairfax's backing, Under Armour's comeback story feels real. The brand's image improves, and momentum builds. Perception becomes reality in business. The first chapter of a new story has begun. Fairfax's investment isn't just cash, it's active partnership. With a 22% stake, Fairfax will likely have board influence and a say in strategy. Their experience in turnarounds brings fresh perspective and accountability. Fairfax pushes companies to refocus on core strengths. In Under Armour's case, high-performance athletic gear. They challenge old habits and demand results. This hands-on approach ensures the turnaround plan is more than talk. Fairfax's involvement means Under Armour has both resources and guidance. It's a partnership built for long-term value, not quick fixes. The Fairfax investment is a lifeline, but the road ahead is tough. Under Armour faces fierce competition from giants and nimble upstarts alike. Reigniting revenue growth is critical. Innovation and clear brand focus are essential. The company must decide. Is it for serious athletes, everyday wearers, or both? Without sales growth, the turnaround stalls. Yet, there's opportunity. Under Armour's brand still means toughness and performance. With Fairfax's backing, the company can return to its roots and rebuild credibility. The end of the Curry era opens doors for new marketing and fresh faces. International growth remains largely untapped. With patience and a clear strategy, Under Armour can rebuild, methodically and sustainably. The foundation for a comeback is set. Is this Under Armour's turning point? It's the most promising sign in years. Fairfax's investment signals the brand's story isn't over. It's a chance for real recovery. But a turning point isn't a guarantee. The hard work starts now. Management must innovate, market smartly and execute with discipline. The real test will be sustained growth, not just a stock bump. Success means winning back customers and expanding market share. The Fairfax deal buys time, but Under Armour must use it wisely. This is the classic underdog comeback, if they seize the moment. For the first time in a while, the future looks brighter. The world is watching to see if this revival is for real.